Welcome to This Explainer. If you've ever felt totally overwhelmed by the chaotic, noisy world of investing, well, you are in exactly the right place. Today, we are going to demystify all of it. We're looking at a truly transformative, mathematically backed framework laid out by J.L. Collins in his legendary book, The Simple Path to Wealth. We're going to clear away the clutter, completely ignore the financial talking heads, and look at exactly how to build true wealth using clear, undeniable numbers. But before we even think about looking at a single stock or index fund, we've got to start right here. Why do you actually want money? I mean, really think about it. Are you just blindly chasing stuff? The luxury cars, bigger houses, designer clothes? Because if you're just chasing stuff, that finish line, it's going to keep moving on you. The ultimate prize of wealth isn't consumption, it's autonomy. It is quite literally buying back your time. And getting to that autonomy is actually surprisingly straightforward. Here's our roadmap for today. We're going to cover the purpose of wealth, the stock market engine, the one true fund, the three enemies of wealth, a step-by-step plan, and finally, reaching financial freedom. All right, let's dive right in. Part 1. The purpose of wealth. To really make the math work here, we first have to fundamentally redefine the true goal of accumulating assets. So J.L. Collins introduces this absolute psychological game changer, FU money. Now, this isn't about conspicuous consumption. It's really about building a protective shield against toxic situations. It's the ultimate freedom to just walk away from a bad job, a terrible boss, or a stressful living situation. When you frame wealth this way, every single dollar you save isn't some sort of deprivation. It's actually a tiny purchase of your own future independence. Pretty cool, right? Moving on to part 2, the stock market engine. How do we actually grow those dollars into that shield of independence? Well, we use the single greatest wealth-building machine ever created over the last 150 years, the U.S. stock market. But to really harness that engine, you've got to understand its nature. The market is volatile, it will crash. And when it does, Collins delivers this absolute foundational truth bomb. When the market crashes, don't just do something, stand there. I love that. A market drop is not some massive catastrophe. It's essentially just a temporary sale. Everything is on discount. And that brings us to this massive psychological divide. When the market plunges, our human brains, specifically the amygdala, scream sell just to stop the bleeding, right? That's the panic response. And if you listen to it, you literally lock in your losses permanently. But the stoic response, which, by the way, is backed by a whole century of mathematical data, is simply doing nothing, just waiting. Recognizing that the market has historically always recovered. All right, part 3, the one true fund. Let's look at this specific ultra-simple vehicle we're going to use to navigate this market engine. Because, spoiler alert, you do not need to pick individual winning stocks. You really only need one fund, VTSAX. This is radical simplification at its absolute finest. Instead of trying to guess if, say, Apple is going to beat Microsoft next year, you just put your surplus money into this single, highly diversified index fund. By buying VTSAX, you're essentially buying a tiny piece of the entire U.S. economy. So you're not betting on a specific horse, you're just betting on the entire racetrack. Part 4, 3 enemies of wealth. Now you might be wondering, if the path is this simple, why isn't everyone rich? Well, to succeed, we have to aggressively confront 3 invisible wealth destroyers that are going to try and derail your progress. So here are the villains. First up, bad debt. If you're carrying a credit card with like an 18% interest rate, that is a guaranteed wealth killer. It is literally a hole in your boat. Second, high fees, which we're going to look at in just a second. And third, your own brain, which, as we just talked about, is totally hardwired to panic when stocks fall and get super greedy when they soar. I really want to pause on that second enemy for a moment. Fees. Take a look at this number. 1%. It seems tiny, doesn't it? Like, if a financial advisor or a mutual fund charges you a 1% fee to manage your money, it sounds totally harmless. But I want you to guess just how much damage that single percent can actually do to your portfolio over time. Now, what's genuinely shocking about this math is the sheer scale of the theft here. Because of how compound interest works, a seemingly harmless 1% fee quietly steals a quarter of your total wealth over a 30-year timeline. 25%! I mean, no way, right? This is exactly why Collins champions VTSAX. Its fee is a microscopic 0.04%. Keeping your costs low is literally the only reliable predictor of future returns. Okay, part 5, the step-by-step plan. Now that we know exactly which financial villains we've got to defeat, let's transition straight into our actionable mathematical blueprint. Here it is, the incredibly clean, incredibly satisfying 6-step roadmap. First, ruthlessly kill your bad consumer debt. Second, stash 3 to 6 months of living expenses in an emergency fund so you never have to sell your stocks in a panic. Third, max out your tax-advantaged accounts like your 401k and Roth IRA. Fourth, put your money into VTSAX. Fifth, tune out the financial news. And sixth, just wait. I know, simplicity requires immense discipline, but you guys, the math here is undeniable. To really prove why waiting is your ultimate secret weapon, let's just look at the snowball math of compounding. If you invest just $10,000 and let it sit at a historical 7% after inflation return, it practically doubles every single decade. By year 40, without adding another dime, you're sitting near $150,000. Time is literally doing all the heavy lifting for you. Which brings us to part 6, reaching financial freedom. The crucial point here is knowing when you've actually won the game. When do you cross that finish line to total freedom? How do you actually calculate your FU money? Well, it all comes down to this magic multiplier, 25. Lock this number in your head because it is the absolute key to calculating your personal financial independence number. Here is exactly how this works. You take your annual living expenses and you simply multiply them by 25. So if you can live happily on $40,000 a year, your financial independence destination is $1 million. If you spend $80,000 a year, it's $2 million. That simple math defines your exact destination. But, how does a big pile of money actually replace your salary? It works because of the 4% rule, which comes straight from the famous Trinity study. Basically, once you hit your number, you shift to a portfolio of 75% stocks and 25% bonds. You can then withdraw 4% of that massive pile in year 1, adjust it for inflation every year after that, and statistically, you have a greater than 95% chance of never running out of money over a 30-year retirement. It takes that giant lump sum and transforms it into practical, sustainable, lifelong income. And this brilliantly illustrates the ultimate thesis from the source material. You absolutely don't need to be a financial genius to do this. You don't need inside information. You really just need to spend less than you earn, invest the rest in broad index funds, and let time do its thing. It gives you this incredible sense of calm, stoic empowerment. Which leaves us right here. The simple path to buying back your life, your time, and your absolute autonomy is right in front of you. The math is proven, the steps are clear. The only thing really standing in your way is distraction. So what financial noise will you choose to tune out today so you can start securing your own FU money? Start simple. Start today. Thanks for tuning into this explainer and keep learning.